My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Kevin. Welcome to Mad Money by Meet Kevin. Welcome to Cramer by Meet Kevin. Other people want to make friends. My job is to make money. Since Jim Cramer is off today, I'm taking over. My job is not just to entertain, but to educate, train, and teach you. So check out my courses at meetkevin.teachable.com, use the coupon code, or tweet me at RealMeetKevin. The market started off hot today. It didn't sell back down as weenie baby fund managers rotated back into undervalued and severely depressed tech stocks. The rotation to cyclical and recovery stocks came to an end. The Dow flat, just up 30 points today, less than 0.1%. The S&P 500 advancing 54 points, and the Nasdaq up 1.14% today. A lot more optimism today as the market is beginning to see a reopening play, broadening to and expanding to the entire market. That is, the entire economy should perform well, and perhaps we'll be going into a roaring 20s. So why bet against this market? The bond market also stabilized substantially today with a massive bond auction today, going a lot smoother than expected, leading yields to decline. In addition, we have a massive bond auction tomorrow, but people are hopeful that we are going to see the same stability tomorrow that we saw today. On top of that, GameStop GME ran 26.94% today, which lately only seems to be going up. Tesla, Nano Dimension, Microvision, Sundial, Neo are all up 16 to 19% on a day, with SPACs back, with Churchill Capital up 10.74%, ChargePoint up 10.9%, Canoe up over 9%, Matterport up over 8.7%, and cannabis making a return as well. All sectors that have had a bloody sell-off since February 19th. And no one seems to know sell-off more than Cathie Wood, Chief Investment Officer at ARK Invest. Yesterday, Cathie Wood topped off her worst sell-offs in over a year since the pandemic's crash, leading many to count Cathie Wood out of this race. But what did she do? She doubled down. She said, now we don't think our stocks will 2x, we think they will 3x. And today, ARK Invest funds had one of their best days in over a year, especially as Tesla roared back over 19.6% just today. But is this buy time? And now to help us make sense of all of this in this crazy market today, let's bring in Jeremy from Financial Education 1, 2, and 3. Jeremy, tell us, what the heck is going on out there in this world today? Welcome aboard. What are you doing today? You buying, you selling?
Well, I'm just watching the market. It's going up and down, but it's mostly going up. And I'm thinking to myself, oh my gosh, I need to go all in like right away. But no, I took the day off from buying. I said everybody else in the world seems to be buying stocks today. So I'll take the day off, man. Take the day off.
That's amazing. I love that. It's so green. It's like, you know, just turn everything off and go for a walk. Have you been buying over the last few weeks in the madness here? What have you been buying, and what do you expect going forward? Do you think we're going to have, you know, when inflation data comes out tomorrow, some big problems? We got another bond auction tomorrow. What's your take?
Yeah, I have been buying, and I've been buying a lot for the past few weeks. Corsair Gaming, CRSR, been buying that one a lot. Tattooed Chef, who reports earnings tomorrow after the bell, TTCF, been buying that one heavy. GGTTF, which you did a phenomenal interview of the CEO, by the way. You did, I mean, oh my gosh, you said you weren't as educated on the industry, but based upon how well you did in that interview, I thought you were an expert on the Jack Jackson industry. But yeah, everybody needs to check out that video. And yeah, I've been buying a little Facebook lately and a few other stocks. But I mean, this market, you know, I don't know. I do have a little trust issues with it. That's why I think I took the day off with buying, because, you know, you see it make this massive move up. I think it was up over 4% today. And it's like, just out of nowhere, it just boom, skyrockets, man. That's crazy. But yeah, so yeah, I have been buying a lot last few weeks, though.
So you're thinking there's a good chance this thing could come right back down as fast as it went up?
It's a possibility, and I am kind of bracing for that just in case it does. And that's why I wasn't rushing out to buy any stocks today. I mean, look at the move. Tesla was up almost 20%. Holy smokes, this ain't no joke. It's like, oh my gosh, man. You're going to be flipping my flapjack. Some of these moves today were parabolic. I mean, I was looking at stocks 8, 10, 12% today. I'm like, oh my gosh. So yeah, today was a day I said, you know, let's see how real this comeback is. Let's see what happens over the next few days.
How do you think the market's going to respond to inflation?
Inflation, man, I don't know. One side of me says it should go up. That side of me says there's some worries and maybe interest rates go up, and then that brings down valuations more in some of these high flying stocks that we saw today. Maybe they come down a bit. So I'm a little divided, man. But right now, when I see a day like today, I say let's be a little more cautious and let's chill back a little bit. So that's what I was doing today, man.
Awesome advice from Jeremy over at Financial Education. Thank you so much for coming on, and we'll see you later on Millennial Money.
Hey, absolutely. Thank you, Kevin. You're the man. Thank you.
So Jeremy's recommending caution, and he's not wrong. It's very common for stocks to sell off 3 to 4% after big gains like we've seen today. But let's listen in to see what Stephan has to say. Graham, what's your take on the market today? Are you buying this crazy run-up we've got today?
Of course. Couldn't not. How can you waste this opportunity? So throughout the last week, I've been buying in. It's been painful to throw your money in the market and then see the next day be like, darn, could have just waited one day and then gotten an extra few percent. But I've been buying in consistently, whether the market's up or down. And throughout the last few days, today has been fantastic in terms of making all my money back that I've been putting in the last few days.
That's awesome. So definitely happy then that you bought the dip. Are you worried though that tomorrow, we got another bond auction, we got maybe inflation data coming out. Are you worried that this thing's going to crash back down to lower lows?
Honestly, I couldn't care less. That's the honest answer. It really doesn't matter to me. It's nice, I gotta say, to look at your portfolio and be like, yes, I made the right choice. It's up 4% today. That's awesome. But honestly, it really doesn't matter either way. I've been listening to your videos too. And of course, just you shift your mindset around. You're getting something at a discount and you're de-risking. I've never heard of it said that way before, but makes sense. I like it.
Awesome. So you're buying this, you're picking up these lower prices. What are you buying something specific right now? Or are you picking up the Tesla attendees, or are you going into the ARKs?
Oh man, Tesla has been very tempting to want to buy, and I have not increased my Tesla allocation. Right now, I think that makes up like 6. To you, it's nothing. To me, it's like, I think it makes up like 6% of my stock portfolio is like Tesla, which is on the high side of things. So I've been buying more Enphase, more S&P 500. I bought some Etsy. So I bought more NEO, more Tattooed Chef, Apple at, I think, 117. What else did I buy? Yeah, so NEO I bought a lot in the low 30s. I figured low 30s, where's the risk in that? And then I bought actually a little Amazon when it was around like the 29.50 range, because I figured below 3, it's like you can't go wrong with Amazon long term. But the bulk of that was really in S&P 500. Oh, and then AI at the 70s.
Nice. Yeah. So you're picking up on the deals you have been over the last couple weeks. So in other words, for you, if the market dips tomorrow, it's just better for you.
Right.
That's awesome.
It really thank you. Difference. Yeah.
Thank you so much for coming on. We'll see you again next time.
Can't wait.
Now it is time for the lightning round. We have multiple stocks on the list today, and we are going to start with Square. Square's acquisition of Tidal, the music streaming platform, puts Square in the driver's seat of potentially selling song rights via NFTs or non-fungible tokens, a space that is absolutely exploding. You have to be bullish on this one, because NFTs could be a big disruptive force in the fintech space, and Square might be at the helm. Therefore, at a price of $225.69 a stock, to me, this is a buy. And then, of course, we have XL Fleets. XL Fleets is down over 70%, getting absolutely slaughtered from its highs of over $30 to a current price of $11.64. As a speculator, I am interested in the stock for a potential rebound, but I have to say, as an investor, this one for me is a big sell. I am not bullish on this one. Next up, we have GameStop. Oh man, GameStop. GameStop is one that was all aboard at $40. But at $247, it might be time to ring the bell. Take some profits on this one, and I know that sounds like a paper hander. But folks, you do not want to be on the front lines of this one when the time comes for the firing. Now, folks, the next stock we need to talk about is Shift Technologies. Shift Technologies absolutely crushed expectations, making me very bullish on this stock. With a valuation substantially lower than Carvana's, not only as a multiple of revenues, but in terms of its potential growth, with profit per car going up and in-house reconditioning booming. This company is ready to explode as soon as the Wall Street weenie babies actually realize this is a great company and a company to be nothing but bullish about. This particular stock, SFT, is a triple buy. This company's revenues have skyrocketed as advertising expenses increased at a substantially slower pace, implying much stronger organic growth. And folks, this is the end of the lightning round. And it is also the end of this episode of Mad Money by me, Kevin. If you found this helpful, consider sharing the video. Get out there and make some money.
Don't miss a second of Mad Money. Follow,